Hey everybody, it's Paul here from Blossom on my YouTube channel, Better Call Paul. I'm going to do my fourth video on my real life case study. I started this on Blossom back in May, and I was posting regularly about the changes I was making to my portfolio and what the case study was all about. So just a quick overview. I have a tax-free savings account in my RBC brokerage with just over $55,000. And I decided that instead of reinvesting 100% of the distributions like I would start pulling out $1,000 a month because I wanted to prove to everybody that this account will sustain itself. That just because I pull out $1,000 a month, the account's not going to go to zero. Okay, guys? Just a reminder, I'm not a financial planner, and this is not financial advice. Okay, this is my journey towards retirement, and I'm just sharing it with everybody so that we can all learn about covered call ETFs and we can all make money together. So the first thing I want to do, guys, is go over some of the changes that I've made in the past 3 months because I really started this case study in June. So it's been 3 months now. So I'm just going to show you some of the changes I made to the portfolio. So I'm only going back as far as June. So you can see that June 18th, I sold 250 shares of CNYE and I bought 225 shares of MSTE. Now, whenever I make a transaction like this, guys, it's because one position is above my average cost and one position is below. And chances are the one that's below pays a higher dividend. So in this case, MSTE pays 55 cents, where CNYE pays 40 cents. And my average cost for CNYE is 11.74. So I did realize a bit of a profit. So then June 24th, I did the same thing. I sold another 100 shares of CNYE. You can see at this time, though, the price had jumped up to 16.92. So it was an even bigger profit for me. And I bought some shares of TSLY. And then on June 26th, I sold another 100 shares, but now the price was up to 17.85. So again, my profits were going up. When I sold CNYE June 26th, I ended up buying 105 shares of Alti and another 50 shares of MSTE. Then July 9th, I decided to sell 150 shares of NVHE. That's after the underlying position, NVIDIA, started to do well again. So I went from being in the red for a long time to finally being back into the green. So I sold those and I bought some more TSLY shares. And then finally, guys, in August, I did something a little bit different. I had started purchasing XEI because with RBC, it's commission free. And I was using that in a way as a bit of a cash reserve because I don't normally carry cash. But XEI is pretty conservative. And when the market went down, XEI was up about 1%. So I sold my 40 shares of XEI. And you can see I ended up buying back 100 shares of CNYE at $13.39, right? So if you remember, the last 100 shares I sold for $17.85. So I was really happy about that. Okay, so let's take a look at the overall portfolio balances and such. So somebody on Blossom had asked me to keep track of the balance each month so that we can compare. So you can see back in January, February, March, and April, I was below $50,000, actually as low as $45,000 in March. And then come May, I got up to $50,920. By June, it was 58. By July, it was over 60,000. So right now I'm currently at 55,447. And I think I've said in previous videos that I would like this to be around, I think I said around 50 to 55,000 would be great, plus or minus a little bit. So, but most importantly, you can see here that my monthly distributions have gone up quite a bit. Actually almost $100 from the previous month, right? From $15.90 to $16.89. Now, I am anticipating that September might be a little bit lower because MSTE did drop their distribution by 5 cents. So we'll have to wait and see. I have taken out 3 months worth of $1,000. So we're at a total of $3,000 has been withdrawn. And I added a fourth column here just so you can see my current cash balance. I do have 177.96 that I can reinvest, but I'll probably wait until I get a few more dividends before I end up doing that. Now, guys, I wanted to show you also the positions themselves. So here you can see that my CNYE position is still in the green. It's not as high as it used to be. I think at one point it was up over 30-40%, but it's still in the green, which is fine. HHIS, which is my largest position, you can see I have 24,560 in it. It's still in the green. MSTE, as we all know, has pretty much fallen off a cliff. But again, I'm not worried about it. We all know strategy is down at the moment, and it's not as volatile as it used to be. But I've had a lot of people message me asking me whether or not they should sell out their MSTE and move the money to something else. And in my opinion, I think the answer is no. You bought it. When you bought it for a reason. You knew what you were buying, and you have to weather the storm, right? You have to hold on to it while it's low and possibly add more shares. So for me, I'm just going to keep what I have, and I'm going to collect the dividends in September, and then I'll decide what I'm going to do with them. This one, NVHE, was negative for quite a while, but it's been positive for the last few months, which is great. TSLY as well was negative for quite a while, and now it's positive. And Alti, not looking so good, but I started buying Alti when it was high, so I'm not too worried about that. And it pays a great distribution every Friday, which I can use to buy other shares of other ETFs. So I'm okay with that as well. All right, guys. So all in all, if you're still watching this video, I would like to say thank you. And just to remind you that I will put a link in the bottom to Blossom if you want to join Blossom. I think it's a great social media app for people who are interested in finances and investing, which you probably are if you're watching my video. Also that, guys, I couldn't be happier at this moment with this real life case study that I'm doing. Again, I know it's only been 3 months, but the portfolio is doing exactly what it's supposed to do. And, September is coming soon. Well, it is September. September distributions are coming soon. I'm going to have the opportunity to pull another $1,000 out of this account, but I'm still going to have $500 or $600 left to reinvest. And with so many new ETFs been coming out recently, it's going to be fun just deciding which one to pick. Right now, I have 4 particular ETFs in mind. The first one being Harvest's new HHIC. I think that would be a great balance for my HHIS position. It doesn't yield as much, but I think it would add a lot of stability to the portfolio. Second to that, I think I would include QDay. Right now, it's below $24 a share, so it's yielding over 20%, which would be great if that remains the same by the time I get my distributions on the 9th. I would also consider putting in Harvest's new Shopify ETF because that one's going to pay the highest yield, which is what this portfolio is kind of all about. So that one's definitely in consideration. And lastly, now there's a new ETF fund provider coming out, 9 points. I'm sure you guys have all heard. And they're bringing out 10 new single stock ETFs. And they're also bringing out a fund of funds, which I really like. So the fund of funds is ECHI. And the most interesting thing is that it's going to be yield weighted. So the single stock ETFs that pay the most are going to be up to 15% of the portfolio of the fund. So I really like that. Anyways, guys, that's about it for today. So until next time, bye for now.